So how do I come up with these daily trading ideas? So what I do is I run my dashboard, I check the summary table, which you guys are used to seeing in the dailies. And then I run this cross-asset thing, where I look through each asset class, equities, commodities, FX, bonds, sectors, and I have my strategy compass, right? So if I look at what happened yesterday, we've got a bit of a cluster in the middle there. For sectors, bonds, we're seeing TLT pretty oversold. Vol's not on its knees anymore, it's actually had about a 3.5 vol pop. But in terms of spot, it does look pretty oversold right now. So that's got my juices flowing on bonds. FX is a bit of a scatter all over the place. We're already long a bit of dollar calls, so I'm not going to touch that right now. Commodities, again, pretty scattered. We've got nat gas kind of probably the most beaten up right now, but I've already kind of mentioned nat gas calls, longer term, call spread, so you know, we don't need to repeat the trade idea. And then looking at equities, we're pretty clustered. So nothing's too overstretched, even though we have corrected, we've kind of corrected back into the middle of the range. So for me, looking through those strategy compasses, the obvious place to look is bonds. So then I jump over and look at the chart on TLT in a bit more detail. So here, TLT chart. So, you know, I kind of mentioned that I thought this downtrend, this short-term downtrend was intact a few weeks ago. Annoyingly, I didn't short the damn thing, right? But anyway, we've cracked below this 99 support level here. So the question is, whilst obviously we're overbought, we're on the lower Bollinger Band, on the daily we were, and then so I zoomed out as well. So on the daily we kind of cracked down here. It's not looking great, but you know, we did, if we go back to the lows of last October, that's at 93, which actually isn't that far away now. But what I like to do is check what the momentum's doing, right? So you see here the momentum, you aren't seeing my favorite momentum indicator making new lows. So that's what we call a potential bullish divergence. I checked that on the weeklies as well, and it's actually looking even better. So TLT has made a new low from where it got to in 15th of May, where it made a low at around 100. It's now gone through there, it's made a low of about 96, but the momentum indicator on the weekly has not made a new low. So to me, that is a setup for a potential bounce, okay? Now, I don't necessarily think that bounce is gonna happen in the super short term. So then I have to look at the actual individual dashboard on TLT, where I can find that here. So individual on TLT, like what would I actually trade? Would I buy calls? Personally, I don't really like just buying outright calls because, like I say, the vol's not really on its lows anymore. And in terms of in short term, I'm not overly convinced that TLT is going to bounce straight away, and I need to go lower first. So how can I get exposure to a potential bounce in TLT but be clever about it and use the vol surface to my advantage, right? So what I do is I look at the term structure, and I can see here on the term structure that we have the green line there is inverted. So you've got short dated vol has popped massively and the long end has kind of barely moved, right? So I actually like the idea of selling like September calls against December calls, being net long delta on that trade, but using the inversion in the curve to my advantage, right? So that's kind of where I'm heading. And so looking at the levels, you know, if we were to get a bounce, where do I think is going to be difficult for us to breach in the short term? And I'd say 102. If we look here, 102 is probably going to act as resistance. So that's how I think about what call strike I'm willing to sell in the front end, right? Where is this thing going to struggle to break above? And that's when we jump over to our trusty optionstrat.com. So I've got a call calendar here. I'm thinking September as my short maturity. I'm thinking December as my long maturity, so I'm playing the calendar. I look at these 102 calls, they're roughly 20 delta calls, which generally I like selling. If I'm trying to sell options, that's not a bad place to go. These things bring you in 63 cents. And then I'm just thinking to myself, so then what December calls do I want to buy against it? So obviously if I bought the 102 calls against it and just did a straight call calendar, that would cost a fair amount of premium still. That would cost you like $1.7 because these things are worth $2.30. And it would have quite a lot of long delta on it as well. So I'm not as convinced that I want to be so long delta right here and catch the falling knife. So what I do is I push these call strikes up to maybe 105. That takes the delta down to 28, which means the net delta of the structure is only about 8% or even less. But look at the payoff profile, right? Whilst an immediate rally to 100 makes me no money, the passage of time, that if we get a bounce to 100 to 102, through the passage of time we start to make money. So we can make some money off a bounce that way, and provided we don't breach 102 by September expiry, we've basically got long those December calls at a massive discount, right? Those December calls are worth $1.50, and we've basically saved more than a third of that premium by selling those Septembers against it. So for me, that is the way I go through my process of identifying a trade, looking at the chart, looking at the levels, looking at the shape of the curve, and then seeing what trade implementation sets up for me to express my view, which is not a super high conviction bullish view on bonds, but I do think bonds are a bit oversold, and I do think there's going to be a bounce coming maybe in the next 3 months. How can I play that intelligently?